3 out of 4 traders don't know if they trade better continuations or reversals. Are you one of those that don't have a journal or have the data to objectively say that you're better at trading continuations or reversals inside of these setups? Well, in today's video, what I'm gonna be doing is I'm gonna be explaining you 4 tips into continuation, 3 tips into reversals that you can apply right after this video and will make your trading, I think, excel a lot. Okay, so when it comes into this, first of all, before we jump into the examples and the tips, it's very important that everyone understands the importance of giving a bit of time into understanding this. So what do I mean about this? So as a trader, right, it's very important that once you start applying what I'm going to say on the video, is not enough time to say, well, I've taken a few weeks of trades and therefore this doesn't work. You're going to need to test this for at least 300, 200, 150, like a bunch of trades to actually determine the data. And why is this so important? Because there's going to be people like yourself that you're going to be watching this video and be like, well, I've applied your reversal system and it's not working for me. Well, that means that you're not going to be a reversal trader because the way you approach the market, the way you see the market is just not allowing you to see these setups, but maybe you are able to see continuation trades and vice versa. So that can be one option. Or the other option can be like, hey man, I actually saw the video and the tips apply in a way that I am the sort of trader that can trade both. Myself, I trade both, okay, because I like both setups and I can see both setups, but that doesn't mean you need to be fixed to trading both of them. You can just be a reversal trader and that's it. Therefore, let's get straight into the point. Let's get into GBP USD. You guys will see I don't get back into price action of March or February. I'm just literally going into this week's price action of GBP USD. This is July 25th. Okay, the last week of July. You see where the market is. So we're gonna be looking at the price action of Wednesday and Thursday and check the setups. Now this video will be uploaded in 1-2 weeks, but you can see that it's this week development. So first thing, when we're gonna be trading reversals, okay, the first 3 tips that we're gonna be looking at when it comes into reversals is the first one is gonna be inducements, are gonna be very important. The second confirmation that you're gonna be looking for too is the time of the day, and the third confirmation is gonna be internal break of a structure, internal market structure. Once you get these 3 correct for the reversals, you're gonna be okay. Now check that I'm watching the market also on GBP USD or any other pair on the M5 time frame. I'm using this just for an intraday, intra-session setup. At the beginning, I incentivize you guys to just go for a 1-3 and start getting consistent. But later on, you will see you can actually hit like 1-5s, 1-6, 1-8s and stuff like that. But you can stick at the beginning to a simple, actionable plan for you to consistently hit 1-3 and you're out of the market full volume. Now, in here, what we're going to be looking at is the first trade. So very importantly, right, when we're looking at reversals, we need to understand one simple thing, that you are trading on the reverse of what the market has been flowing for the day or for the session. Therefore, you need a strong run of liquidity. So when I look into the left, okay, this is a strong point of interest or a strong high to be taken out. Why? Because it's an Asia high. But at the same time, when I'm seeing what happened in London session, is that we saw how price was creating higher lows and higher highs and therefore flowing on a bullish uptrend. So for me to have a reversal setup, I do need to induce liquidity. So once I induce liquidity, first confirmation, the second one, it needs to be what time of the day. So when it comes into what time of the day, we're going to be trading London or New York. So I'm going to be telling you guys the time that I see when it comes into Madrid time. So if you are on a different time zone, of course, just go and change it to yours. But when it comes into Madrid time, I look into the market into the 9 to 10:30 window, and that's for London, and the 3 p.m. to 4:30 p.m. window, that's for New York. So you want those inducements on those windows. So as we can see in here, that is going to be the first setup, is after the whole day trending to the upside, you look into the left, you get an inducement, you also get the time of the day correctly, which is the window in this case of New York, and then you get this one and second point, and the second point here, or second point of structure, is the one that actually breaks internally to then go back into our entry position and therefore give us our first, well, in this case was a potential 1-5 but you can actually close at 1 to 3 as we actually spoke. Okay, so that will be very simple, right? Very simple, actionable, 3 steps for you to have an edge into a intraday, intra-session perspective. Now that's gonna be the first setup. The second setup that we're gonna be looking at is another reversal, just to reinforce, and because actually it happened the next day. And the third setup we're gonna be looking at is continuations. Continuations is gonna have 4 tips, so stay until the end if you actually wanna get and see how you can improve those continuation setups and therefore apply that into your trading. So let's jump into the second setup of the next day that we're gonna be covering. Then we have the Asia range, and look how exactly the same as you get this whole trend to the upside. The next day or during the Asia session, you start to get this trend to the downside. So once you get this trend to the downside, for you to get a reversal, you need an inducement. So this inducement that we saw the previous day taking a high is we're taking a low, if you want to, of course, look for buys. So in this case, you get the trend, you get the inducement, first confirmation, you get the inducement. What time of the day? Check is 9:15. In this case, you're getting this setup for London. And then the next one, check how you're getting an internal BOS, right? So let me just show you how this lower high created the low. That makes an internal push, and therefore from there you just pick the candle or order block or IFC candle that actually created the push, and on M5 you can actually enter in there and go into the next high. So that will be into creating this higher high. So now check how this becomes like around 1.47. It's very, very important, guys, that once you're trading an intraday session or you're trading based on just M5 time frame, your exit needs to be also intra-session or on smaller time frames. And the reason I say this is because I see a lot of people trying to enter on a smaller time frame, but then having such huge targets in place. To have a huge target in place, you need to have a context or frame of our higher time frames. If you're just going to be focusing on the tips that I'm giving you for this intraday way of taking reversals and continuations, your take profits needs to be intra-session or intraday or the next liquidity target on a M5 time frame. Okay, so same as here, that you will stop in here or you'll stop in here on an M5 perspective, same in here. You stop in here on an M5 perspective, and then more so being on a bearish market. As we can see, we're still bearish. You know, you've already made a decent pullback on this reversal. You're not expecting a internal BOS unless it happens after the fact. So therefore, this trading here should be sufficient, and that's your reversal trade. Okay, when it comes into market structure, we can do another video about it. So let me know in the comments also if you will want to see something around that. So now we're gonna jump into continuations. Okay, so for continuations, we're gonna look into 4 tips. Okay, 4 very important tips. The first one is gonna be, or you need to become very, very good at market structure. Very good. You need to know and identify when it's a run of liquidity and when it's actual market structure going bearish and bullish. After knowing that, you need to become very good at supply to demand and demand to supply levels. So high probable areas of reaction. Number 3, you need to also become very good at identifying liquidity. So where is liquidity resting? I'm going to show you on the example in a second. And number 4, you also need to become very good at momentum. And more so when you're trading lower time frames, you need to know where the momentum is heading of the session, and therefore going with that volume into, in this case, bearish price action. Check how the volume hits in, and then you can have a very smooth 1 to 6. So let's jump now in here. First thing, I want to remove the previous trade so we can be a bit more clear to explain this. First, a more important thing is market structure, because once price creates a higher low, higher high, higher low, and higher high, there's a lot of people expecting this demand to be held. Of course, if we look into the left, we understand that there was certain context for it to fail. Okay, but if we're not looking into the left, okay, and we're just focusing on this price action, there's a certain degree of that this could be a demand area that can actually hold and go higher. There is a probability there for this to happen. So once I see this tap into these demand areas, check how the price is reacting. You have a reaction, you have a push, you have a retracement, and you have another push. So if this was a true market structure from here to here, this new push should be creating a new high. That should be your mindset because you don't know, of course, what's happening next, right? So once you see this run of liquidity here, you still don't know if this is going to make a retracement and create a new high. It's still unpredictable. It's going to be predictable after the fact. And after the fact means that once this breaks lower, now we can see that this was a run of liquidity, this high in here that took out this, and also this demand was not strong enough to create new higher highs, and therefore also this is a run of liquidity because it breaks lower, and in the future this demand can turn into a supply entry. So now we add that into our market structure first confirmation. The second one is the demand to supply that I've already mentioned. Number 3 is identifying liquidity. So now, where is liquidity forming? Well, in this case, we can see very clearly that we have 1, 2, and we're getting an uptrend in here. That liquidity is forming on this kind of floating liquidity, if we want to call it in some way, or dynamic liquidity, that we can see how price is actually tapping, and makes a third tap and then goes to the upside. So it's inducing bullishness into the market, but we know that becomes a trap. So once that happens, so we're starting to see this, we can also, of course, apply the window of time. Remember, I also said until 4:30 p.m. So you can see here until 4:30 is still valid to sell. And then from here, you get your POI where to enter. That'll be your entry, that'll be your stop loss. I'm going to leave that for you to backtest. It's very simple. And from here, right, you can actually go into selling positions. So if you held until the Asia Open, it will be a 1-8, but you can very easily, very smoothly close your position after a 1-6. And therefore, that will be your trade. Simple, smooth, into the point, should be no stress. You're following a plan. And first, you're following market structure. Second, demand to supply areas, so supply to demand. Third, identifying liquidity, where's liquidity resting. And number 4, the momentum of the session. So again, this is very important, but at the same time, it's very basic. Very basic 3 steps on reversals, very basic 4 steps into continuations for you guys to now apply. Again, this is not very overcomplicated. I have more confirmations to enter into the market, but this is just 3 to 4 simple ones that can allow you to actually, well, get into a stage of profitability or get into your funding accounts. Therefore, hope this video was enjoyable, that you took value from it, and then see you into the next ones.